Turning to the markets, and investors were in wait-and-see mode early on today following yesterday's Greek-driven sell-off, but picked up steam, and the ASX 200 finished the session 0.75% higher, with utilities leading. All good on the Asian markets, but Hong Kong's Hang Seng is rallying strongly as well, and the Australian dollar is currently buying around or close to 77 US cents. And Marcus Padley from Marcus Today is in our Melbourne studio. Marcus, our market seems to have shrugged off concerns over Greece today.
It has, Elise. There's a little bit of suspicion that this is a bit of year-end window dressing, but I have a funny feeling it's going to be repeated in the overseas markets overnight. But also, I read an article this morning saying Greece is good because the market has been worrying about Greece for the whole of 2011 was dominated. In fact, we were demolished by Greek fear, and we've had that again in the last 6 weeks or so. The market's off over 10%. Some of the banks have been off over 20%. So we're trading under Greek fear again. What we could get is a deferral of the Greek debt default issue for 6 months, and we get 6 months of Greek fear-free trading. But the truth is, if Greece does go out of the EU and there's a Grexit, we will get perpetual Greek fear-free trading. And although you wouldn't want to be Greek, for equity investors, particularly Australian equity investors, they are absolutely sick of trading under this cloud of Greece, when Greece is effectively, we all sort of know it's financially irrelevant, but it does change the culture a little bit for other countries that, you know, maybe if they don't pay, other countries won't pay. But essentially, I've written it up as a bit of a Y2K event. You might just find that this financial Armageddon everyone's expecting on the day that Greece exits the EU, if they do, we all look around and go, what are we all worried about? Because everybody's had 5 years to prepare for this. It's not like the GFC that all the collateral damage was happening as a surprise. This has been anticipated. So it may well be that Greece has set us up for really quite a good opportunity to buy in the markets.
We'll wait and see. Well, the end of financial year is, of course, today, and the market's back where it started the year. So not a great day for fund managers, really.
No, well, it's okay for fund managers. It's actually going to be quite interesting because fund managers now, when they send their letters out for how your fund performed for the last financial year, it's going to be good because you've got a sort of zero base of where the equity market went. You'll be able to see how much alpha or value every fund manager has added by whether your fund's gone up or down. Essentially, including dividends, you know, the market would have been, or the average fund would have been up sort of 5, 6, 7% or so. So it'll be interesting to see. But I think it makes life a lot easier for fund manager marketing departments if the market's gone up a lot this year. Today they're going to be having to use their imaginations to come up with a story for how great it was and how good it's going to be next year.
One of the stocks that the market got very excited over this financial year was, of course, the float of Medibank. It's now trading below where retail investors bought in at, and it's been on a slide since February, 2 months into its float. Is that going to turn around, or is it going to continue to slide?
Well, when it first listed, Elise, I think the range was it $1.55 to $2, and it came on at $2 for retail, $2.15 for institutions, and a lot of us thought it was overpriced there and got some criticism because it went up straight afterwards. But I remember at the time that independent research, because there was a lot of non-independent research, the independent research was suggesting you buy it around $1.65. We're at around $2 at the moment. It's a great stock. It's in the right sector. It's got the right drivers, baby boomers, retirement, all that sort of stuff, but it's probably still a little bit expensive. So I think running into the end of the year, you've probably seen some people some institutions who've bought it at $2.15, just taking their loss. But at the right price, they'll be back in. It's a quality stock, but at the right price.
Marcus Padley, thanks very much for your time.
My pleasure, Elise.